After the crypto crash, investors turned defensive as risk-aware strategies gained ground. The recent downturn in the cryptocurrency market has delivered a sharp reality check to investors, puncturing some of the industry's most aggressively priced segments and forcing a recalibration of risk appetite. While speculative excess has been exposed, the correction is also accelerating a shift toward more sophisticated, actively managed investment strategies that aim to weather volatility rather than amplify it. Over the past few years, the crypto investment universe has expanded far beyond simple token ownership. Investors can now access the asset class through spot exchange traded funds, derivatives such as options and futures, equity stakes in mining and treasury companies, and shares of exchanges and infrastructure providers. The rapid diversification, however, has produced sharply divergent outcomes as leverage, valuation premium, and funding pressures have come under scrutiny. Access to Bitcoin exposure has exploded across both institutional and retail market, said John D. Augustino, head of strategy at Coinbase Institutional. But the structure of that exposure, how leverage is applied, and how risk is hedged has become just as important as the asset itself. Bitcoin's decline, falling as much as 36% from its October peak of $1,26,223 and still hovering roughly 30% below that high, has been painful but manageable compared with losses elsewhere in the ecosystem. Companies that build their corporate balance sheet around holding Bitcoin as a treasury asset have suffered far steeper reversal. For years, these firms traded at hefty premiums to the value of their underlying crypto holdings, fueled by the belief that demand for such exposure would remain inexhaustible. That assumption unraveled quickly. Strategy INC, the sector's bellwether, has seen its shares tumble more than 50% from Bitcoin's peak, while similar declines have hit Japan's Metaplanet and a growing list of limitators. We saw was essentially a localized bubble, said Marco analyst Alden. Once Bitcoin pulled, in the response to heightened volatility, investors are gravitating towards strategies designed to manage drawdowns rather than chase momentum. Actively managed and hedged vehicles are gaining traction as the asset class matures.